Do you want to know which stocks Ray Dalio suggests investors buy now? The world's most successful hedge fund manager, worth over $19 billion, has made his picks for 2023. In this video, we'll take a look at the top 5 stocks that Ray Dalio believes are worth investing in. We'll also discuss the top 5 stocks to watch out for in the coming year. Make sure to hit that subscribe button and don't forget to click the bell icon so you can keep up with our latest content. Let's get started. According to Forbes, Ray Dalio's Bridgewater Associates, the world's largest hedge fund with $126.4 billion in assets and a net worth of roughly $19 billion for Dalio himself, saw mixed results during 2020, with its popular Pure Alpha 2 fund posting a 12.6% loss. However, this fund and Dalio himself have managed to get off to a strong start in 2022, with an impressive 6% gain reported through early December. Given that the outlook for 2023 appears to be more promising, here are Bridgewater's top 5 stock and fund holdings based on its latest 13F filings. iShares Core S&P 500 ETF. This investment's primary objective is to track the S&P 500, which consists of large-cap U.S. stocks. SBDJI calculates the index. Generally, at least 80% of its assets are invested in components of the index or investments with similar economic characteristics. Up to 20% can be invested in futures, options, swaps, cash, and equivalents. The ranking process for these funds considers 249 large blend ETFs, and the best 71 of those have been selected to be featured on our best fit list. Ray Dalio's decision to invest in the iShares IVV S&P 500 ETF shows that he believes the U.S. stock market will recover from its 2022 weakness, and the U.S. economy can be saved from recession in 2023. Thus, this investment offers investors a glimmer of hope for the future of stocks. Bridgewater owns more than 2 million shares of the IVV ETF worth $793.2 million, representing around 4.3% of their entire portfolio value. Apple Inc. or AAPL, Microsoft or MSFT, and Alphabet Inc. or GOOGL or GOOG are some of its top holdings, weighted by market capitalization. This particular ETF is a great way for investors to diversify and gain exposure to the U.S. stock market without investing in individual stocks. With just one purchase, you can become a part owner of some of the largest U.S. companies and reap the benefits as the overall economy grows. Procter & Gamble Company. Procter & Gamble is a major consumer products company, owning popular brands such as Pampers, Tide, and Bounty. Additionally, it is Bridgewater's biggest stock holding. Unfortunately, PG shares have not done well this year. They've lagged behind the S&P 500 with a negative 8.9% return up to February 16th. The company reported a decrease in revenue and net earnings during the fourth quarter. Despite this, many investors view consumer staple stocks such as Procter & Gamble as reliable investments during market volatility. Bridgewater owns almost 5 million shares worth $757.1 million in P&G stock. U.S. News can help you choose the right stocks for your portfolio by comparing companies to their peers in the same industry based on various company fundamentals, performance metrics, and investor preferences. Procter & Gamble Company, or P&G, is a leading consumer packaged goods company that offers popular products in many grocery stores. On her last-minute shopping trip, a busy working mom grabbed a package of Bounty paper towels, some tubes of Crest toothpaste, and a few packs of Pampers diapers for her youngest child, all without realizing they were all Procter & Gamble products. They offer a wide range of goods to meet the needs of consumers like this mom and her family. Whether it's household items, personal care products, or health and beauty items, P&G has something for everyone. iShares Core MSCI Emerging Markets ETF. In 2022, Bridgewater decided to sell off its large holdings in Chinese stocks Alibaba Holding Group Limited, JD.com Incorporated, Bilibili Incorporated, and NetEase Incorporated due to potential risks of being caught up in U.S. or Chinese regulatory issues or being delisted from the stock market. Instead, Ray Dalio has opted for a more diversified approach to investing in China and has invested heavily in the iShares Core MSCI Emerging Markets ETF, or IEMG, which is only around 28% exposed to China. In the fourth quarter of 2022, Bridgewater sold off 347,293 shares, but still holds 14.5 million shares worth around $679.6 million. U.S. News conducted an evaluation of 95 diversified emerging markets ETFs and identified the 28 best fit funds for long-term investors. The rankings were based on comparisons with similarly rated funds within the same asset class. This list provides a valuable resource for those looking to invest passively in emerging markets, highlighting the highest quality ETFs in this asset class. Investors can use this list to find the funds that best fit their investment objectives and risk tolerance. The goal of the investment is to match the performance of the MSCI Emerging Markets Investable Market Index. The fund usually puts at least 80% of its assets into securities that form part of this index or investments with similar economic features. Johnson & Johnson. In the first quarter of 2020, during the initial U.S. COVID-19 outbreak, Ray Dalio began investing heavily in Johnson & Johnson, a blue-chip global pharmaceutical and healthcare product producer. Johnson & Johnson's revenue declined 4.4% for the quarter. However, the company plans to spin off its consumer business into a new public company in 2023, an event that may boost its stock. Bridgewater Associates, Ray Dalio's hedge fund, sold more than 1.14 million shares of J&J during Q4, but still holds 3.56 million shares, worth over $630 million. Johnson & Johnson is well known for its baby powder and other everyday healthcare products such as Band-Aid bandages, Listerine mouthwash, and Visine eye drops. Its consumer segment produces a wide range of brand name items like Johnson's Baby Lotion and Shampoo, Aveeno Lotion, and Neutrogena Facial Cleanser. These items are designed to improve skin and healthcare as well as to promote wound healing and provide topical relief. In addition, Johnson & Johnson manufactures prescription drugs for various conditions. This includes medications for serious and chronic diseases, such as rheumatoid arthritis, HIV, Alzheimer's disease, lung cancer, and diabetes. These drugs are produced through its pharmaceutical segment, which comprises the company's Janssen Pharmaceutical subsidiaries. Johnson & Johnson's products are distributed to retail stores, wholesalers, and hospitals in more than 100 countries worldwide. Founded in 1886, the company is headquartered in New Brunswick, New Jersey. PepsiCo Incorporated. PepsiCo was established in 1965 due to a merger between Pepsi-Cola and Frito-Lay. However, its history goes back much earlier, with Pepsi first appearing in the late 1890s and Frito-Lay and Companies forming separately in 1932. Today, PepsiCo comprises of 6 divisions across different regions: North America Beverages, Frito-Lay North America, Quaker Foods North America, Latin America, Europe Sub-Saharan Africa, and Asia, Middle East and North Africa. In 2018, PepsiCo acquired Bear Foods to appeal to the increasing demand for healthier food choices. Its headquarters is located in Purchase, New York. Despite being a blue-chip consumer staple stock, PepsiCo has lagged behind the S&P 500 in 2023, with a year-to-date total loss of 2.9% as of February 16th. As such, PepsiCo may be an attractive defensive play for investors seeking to preserve capital in uncertain times. Ray Dalio, founder and co-chairman of hedge fund firm Bridgewater Associates, has owned PepsiCo since the first quarter of 2020. However, he sold off around 24% in the fourth quarter of 2023, yet still holds 3.02 million shares, worth over $545.6 million. The company reported 10.9% revenue growth and $518 million in net income in the same period. This reflects the overall performance of PepsiCo despite its underwhelming returns compared to the S&P 500. This highlights how PepsiCo's fundamentals remain largely intact, even though it may have posted weaker than expected results when compared to others. U.S. News can help you identify the best stocks for your investment strategy by comparing companies to other firms in their industry based on various financial metrics, performance indicators, and investor preferences. So there you have it. Ray Dalio's top 5 stocks to buy now. Hopefully this list will help you make informed investment decisions. Which stock among these will you choose to invest your money? Let us know in the comments below. If you found this video helpful, be sure to like and subscribe. Thanks for watching. See you in the next video.